Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nest to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled, every risk is managed, every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into a
Good afternoon, investors. You are now in KleverStock with me, Madhavi, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. And opening today's market wrap with a look at the domestic front, according to financial reports published by the Star and KLSE Screener, the positive momentum on Bursa Malaysia is set to persist, supported by record highs on Wall Street and strong performance across global equity markets, rallying technology stocks underpinned by solid corporate earnings that eased worries over aggressive capital expenditure provided the main catalyst for market sentiment. Despite the broader global advance, early gains on the local bourse were comparatively modest. At the opening bell, the benchmark FBMKLCI edged up 3.7 points to 1,736.36. This measured rise contrasted with sharper gains seen elsewhere in the region, where Japan's Nikkei index jumped nearly 3% to 65,859, and South Korea's Kospi surged 3.9% to 6,609 in early trade. A steep decline in crude oil prices also helped fuel the global equities rally, with Brent crude futures sliding below $80 a barrel to hit their lowest level since July 13. Market commentary from APAC Securities indicated that growing optimism around US-Iran diplomatic negotiations has raised and hopes for a potential reopening for the Strait of Hormuz, and that's easing immediate supply bottleneck concerns. Barring any sufficient deterioration in geopolitical conditions, we expect the local market to maintain its positive momentum, APAC Securities stated in its market analysis. Heavyweight blue chips pushed the FBMKSCI higher during early trading. Top gainers included Nestle, which advanced 1 ringgit 40 cent to 103 ringgit 20 cent, Kuala Lumpur Kapong, which picked up 18 cent to 21 ringgit 50 cent, and Petronas Gas, which added 18 cent to reach 17 ringgit 56 cent. Among active counters, technology and manufacturing stocks saw notable movement. Nation Gauge rose 10 cent to 1 ringgit 39 cent, while Inari Emerton advanced 11 cent to trade at 2 ringgit 32 cent. Bucking the upward trend, EG Industries shed 9 cent to open at 1 ringgit 71 cent. Moving on to local currency and foreign exchange. The Malaysian ringgit opened slightly stronger against the US dollar on Wednesday morning, trading at 4.0940 or 4.0995 compared to Tuesday's close of 4.0945 or 4.0985. The gain was driven by weaker than expected US economic data, which weakened the greenback. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzan Islam Abdul Rashid noted that falling US job openings signal a cooling American labor market, which should support the local note. The US dollar index slipped 0.01% to 99.890 points. The following the JOLTS report, the ringgit could receive some support today, Dr. Muhammad Afzal Nizam stated, adding that he expects the currency to trade between 4 ringgit 8 cent and 4 ringgit 10 cent. SBI Asset Management Managing Partner Stephen Innes agreed the ringgit has support from tech sector investments and global market sentiment. However, he warned that traders are staying cautious ahead of Friday's US jobs report. The broader currency markets remained largely range-bound despite improving risk appetite and a sharp decline in oil prices, with the latter reinforcing expectations of a more dovish policy stance by the US Federal Reserve, Innes explained. While the ringgit rose against the US dollar, it opened lower against most other major currencies, including the Japanese yen, the euro, and the British pound. It also weakened against several regional currencies such as the Singapore dollar, the Thai baht, and the Indonesian rupiah, while holding steady against the Philippine peso. Now for some national news updates. Although European Financial Reporting Advisory Group has raised compliance threshold for the non-European companies, Malaysian exporters will still face indirect pressure to meet sustainable standards. Under the updated framework, non-European parent companies must generate 2.1 billion ringgit in net turnover over 2 years to require direct compliance, which the threshold of European branches rose to 930 million ringgit. MBSB research notes that while these higher limits exclude most Malaysian corporations from the direct reporting, local suppliers will still face supply chain scrutiny and in key sectors like electronics, palm oil, rubber, timber, and chemicals. For Malaysia suppliers, high scrutiny areas include Scope 1, 2, and 3 carbon footprint data, which are audited product-level carbon footprint data. European buyers will also want proof of fair labor, ethical recruitment, and safe working conditions. Another area that will be impacted are the exporters of palm oil, timber, and agriculture commodities that will need to have clear traceability data, MBSB research explained. Direct reporting will mainly apply to large energy, palm oil, and property conglomerates with major European operations. However, local suppliers fail to provide verifiable environmental, social, and governance (ESG) data, risk losing business with European clients. Incorrect or missing data also carries legal and trade risk under European rules like the Corporate Sustainability Due Diligence Directive and the European Deforestation Regulation. Local initiatives like the National Sustainability Reporting Framework and the National Action Plan on Forced Labor have already started pushing Malaysian firms towards ESG compliance. MBSB research advises local businesses to invest in carbon tracking software and treat carbon accounting with the same importance and as financial reporting to stay competitive. We also opine that the revision is a good stepping stone to encourage audits of Scope 1 to 3 and labor data for companies, proactively promoting ESG data, governance, and the third-party verification as a vital competitive edge for the company's potential supplying to the European in the near future, MBSB research concluded. We'll now take a short break, but don't go away. We'll return shortly with the corporate news and developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. According to reports published by Bloomberg News and Global News Wire, Citigroup is leading preparations for a $2.45 billion debt package to back private equity firm KKR & Co. acquisition of medical device contract manufacturer Integra Holdings Corporation. The proposed debt structure consists of $2.1 billion in funded debt, structured as a 7-year term loan, accompanied by an unfunded $350 million revolving credit facility beside Citigroup's financial institutions providing debt arrangement for the buyout, including Barclays, UBS Group, AJ, and Jefferies Financial Group. The debt package is anticipated to launch to investors in the U.S. leveraged loan market as early as September, though transaction terms remain subject to ongoing negotiations and potential revisions. Representatives for KKR, Citigroup, and Integra did not immediately provide comment on the specific financing details. The debt arrangement supports a definitive agreement under which KKR will acquire Integra Holdings in an all-cash transaction, valuing the company at an enterprise value of approximately $5.7 billion. Under the agreed terms, Integra shareholders will receive $127 per share in cash to take Plano, Texas-based medical device manufacturer private. For Citigroup, this transaction marks its second major lead arrangement in the medical technology sector this year. In January, the bank served as lead arranger for an $8.75 billion debt package, supporting the roughly $18 billion leverage buyout of Holding, which included a $7.25 billion leveraged loan priced at 2.25% points over the U.S. benchmark and a $1.25 billion term loan A. And up next, we have a stocks update. According to market updates, the business today shares of MNRB Holdings Berhad experienced a sharp upward surge on Wednesday morning after the group announced a major 1.64 billion ringgit cash deal to divest its primary takaful operations to Bank Rakyat. Investor enthusiasm drove the stock up by 9.7%, with the counter rising 26 cents to 2.94 ringgit by 10:31 a.m. as 2.65 million shares changed hands. The rally follows an official filing with Bursa Malaysia detailing a proposed agreement to sell 100% equity interest in wholly owned subsidiaries Takaful Ikhlas Family Berhad and Takaful Ikhlas General Berhad to Rakyat nominees Sendirian Berhad to a unit of Bank Kerja Sama Rakyat Malaysia Berhad. According to MNRB, the disposal will unlock value from its primary takaful investments while enabling the group to streamline its operations and focus strictly on its core reinsurance and re-takaful segments. Upon regulatory approvals and transaction completion, both Takaful Ikhlas Family and Takaful Ikhlas General will officially cease to be subsidiaries of the group. And today's major corporate developments and the deals across Malaysia. MNRB Holdings Berhad is selling its Islamic insurance business Takaful Ikhlas to Bank Kerja Sama Rakyat Malaysia, better known as Bank Rakyat, for 1.6 billion ringgit in cash. SNS Network Technology Berhad expects to re-recognize revenue from its $298.7 million contract from the supply of high-performance artificial intelligence servers to a Singapore-based customer in its current fiscal year. And moving on to Vantrace Energy, Berhad has secured 830 million ringgit work orders from Petroleum Nasional Berhad's upstream arm to provide transportation, installation and tender-assisted drilling rig services in Malaysia. Westland Bharat has proposed a private placement of up to 94.4 million new shares and to raise gross proceeds up to 60.4 million ringgit for working capital. OM Holdings Limited binding offtake agreement with Australian Minor Element 25 Limited to purchase manganese concrete from the latter's Butcherbird mine in Western Australia. JFM Services Bharat has secured additional release orders worth 83.1 million ringgit for major turnaround works at the Pengarang Integrated Complex in Johor. And K1 Technology Bharat is disposing of its cloud business arm G Asia Pacific Sendrian Bharat to Tokyo-listed Itochu Corp and its Singapore unit Itochu Singapore Private Limited for 94 million ringgit as the group seeks to unlock the value of its investment. West River Bharat has secured 2 mechanical and electrical subcontracts worth 11.1 million ringgit for an apartment project. And that's a wrap for Midday Roundup with me, Madhvi, on KleverStock. Thank you for choosing us investors. Stay tuned for upcoming live stream programs.